Hey, this is Steve Wolf again with another one of Steve's Stock Stories. And I'm here today with my cohort, Jocelyn Magana.
How's it going, everybody?
And today we're kind of having a little bit of different type of a Steve Stock Story webcast, podcast, whatever cast this is. And we're going to be talking to Brian Park. And it's going to be about cryptocurrency because there seems to be a lot of confusion about what cryptocurrency is, what blockchain is, all sorts of different things. And Brian is, according to his own words in LinkedIn, is a startup evangelist, advisor, and angel investor. He's a director for Startup Grind DC and managing director at the Spark Labs Cyber Plus Blockchain, which is the premier startup accelerator in the Washington, D.C. area. And he's currently working as solution architect at Chainalysis. He was formerly the global COO of Startup Grind, which is one of the largest high-tech startup communities in the world with over 2 million startup entrepreneurs in 600 cities. He's also been named as Forbes' 17 top business gurus to follow on Snapchat. It's nice, Jocelyn, that we've got a guru here. That was back in 2017. And he's got professional experience for 20 years. He used to work for AOL, all sorts of things. Let's just say, Brian, you're an expert. Brian Park, welcome.
Thank you. Thank you for having me. It's a pleasure.
All righty. Well, the whole point of this particular podcast is really to find out a lot more about cryptocurrency. We're getting a lot of questions about cryptocurrency, what it is, differences between that and blockchain, all sorts of stuff. So hopefully, through this conversation, Brian's going to explain so that everybody understands what cryptocurrency is and all the shoot-offs from that or offshoots from that. So, Brian, let's start with the first one. What's cryptocurrency?
Sure. So maybe a good explanation is explain what cryptocurrency is not, and then it'll give you maybe some insight of what it is. So
that was going to be my second question.
Oh, what is
what
not?
Is cryptocurrency not?
So let's just kind of look at mankind and sort of the history of mankind and how they were able to sort of basically trade services and goods, right? So way before, society had to find a way to basically trade. And before it was like, hey, I'm a person who does pottery, right? Or maybe I chop wood and I'm a carpenter, right? And so before it was like, okay, well, maybe I can barter, my services with, if I can build chairs or make little bowls, that person over there can make, clothes. So maybe what we could do there is exchange services that way, but I would just make you that bowl, and then you will in turn make me the clothes, and I will do that. But the problem with that, it's not very scalable, right? Because like the value of your, say, a bowl, the wooden bowl, and you want to say, hey, I want to now buy that horse, right? That other person who's selling the horse may not want 20,000 bowls, wooden bowls. And so there becomes the need of like some sort of like medium of exchange. So, way back, like in the prehistoric time, I mean, they used to like do some trades with like arrowheads and like, even like coffee beans, right? And so slowly, like society was like, hey, maybe we should try to like go on to some sort of like valuable material, maybe like maybe some pearls or like things that are hard to get. How about gold, right? And so gold actually became sort of like a tender where if you had a little bit of it, then hey, can I give you maybe just a piece of this, and then I'll instead of me giving services, I can now give you maybe just a small piece of this valuable like tangible material, right? And so now when you sort of fast forward that, right now, and then they had like this paper that's supposed to represent gold, and then now with before where the economy is to say, hey, we will put in circulation monetary paper out there, but it's backed by real gold that we'll put into a vault somewhere. And so, I think back in 1970, the United States basically got rid of that and say, hey, it's the government trust, right? And so, going back to this whole thing about, what is currency. Now this revolution sort of came about and saying, okay, well, we're sort of kind of relying on the trust of the government. And like, really, like, do you want us to just like trust the government? And we've seen many societies where they're like, okay, we'll just trust the government, and I think they know what they're doing. And then sort of you have this group that came from that sort of concept, say, well, how about we create something that's like not attached to a government, that's completely autonomous, that has no CEO, there's no central bank, and maybe since we have computing power, and again, way before, and this whole movement, I mean, I'll kind of label this as like the cypherpunk movement. So these are probably like libertarian cryptographers, right? They're saying, hey, if we were able to create a program and have it sort of like everybody's running this sort of piece of code on various machines, extremely distributed. But then the thing is, if we put this code out somewhere like open source and anybody can download it, I wonder like how many, first of all, will download it, and how many, and then secondly, how many would participate and just keep the program on, right? And then sort of build this layer application, which we'll call a currency, right? So this is kind of like the birth of Bitcoin. And so so in a nutshell, what is cryptocurrency? Well, it was really meant to be sort of like this, the opposite of what this sort of like fiat medium of exchange that's completely divorced from anything that could exert its own sort of power, right? As whether they're governments, whether they're central banks, and so Bitcoin started this whole sort of phase of like, hey, let's create a cryptocurrency, and then all these other currencies, all these cryptocurrencies, sort of forked from it, right? Because everything is all sort of like open source. So a lot of folks were like, hey, I see your Bitcoin, and then I'd like to now exactly copy it, but I'll put my own little spin on it, right? So then that's where you get the Litecoins, and you got the other ones like Stellar, and I mean there's so many of them, right? There's literally thousands of them, and then you can literally go on Coinbase and look all the sort of the top cryptocurrencies there, and they're basically like they're basically like just little bit different versions than the original Bitcoin. So
just so people know too, Coinbase is the exchange where you can buy and sell the cryptocurrencies. Right. Okay.
Yep. So that's that, I guess. So kind of starting like that's what is not cryptocurrency. You kind of have to understand that and why cryptocurrency, the need for it began, and so yeah.
Okay, so it's called a currency, but with currency you can buy things, and it seems to me that right now you can't really buy anything with cryptocurrency, can you?
So. So that's yes and no. So the thing is, I guess what you're referring to when you say buy, I mean, so in the sort of the crypto sphere, there's many applications for cryptocurrency, and obviously, let me actually take it to two steps back, right? So Bitcoin is built on top of the distributed compute, right? This program built on top of blockchain, right? And so there's many different applications for blockchain. Cryptocurrency is one of them. And in this cryptocurrency bubble, payments is one. So like my our philosophy, like at Spark Labs, like, there's always like the whole adoption curve, right? And so we feel like payments it's usually the last sort of frontier. It's like the last mile. And so for us, we're not really concentrating on payments because there's so much other stuff that has to be done before you get to this sort of this last mile payment. So back to your question, like, can you pay things with cryptocurrencies? Yeah, of course you can, but it's not as fast, right? It has to be confirmed on the blockchain. So basically, what happens is that if there's an exchange that happens from one person to another, that transaction has to be recorded onto the blockchain. And the problem is that it's not quote unquote automatic, right? It's not immediate. I'm sorry, it's not like immediate. It doesn't happen in seconds. What happens is that there's processes in place to say they basically confirm this transaction, because there's many computers, right, that are trying to say, hey, is this transaction okay? Yes, this transaction okay. Hey, about you? What about you? Do you agree with that? Yes, I agree with that. Well, then what about you? Do you agree with this? Yes, I agree. So when there was a consensus, then everybody says that transaction happened. Now the problem is that doesn't happen in a few seconds. That actually happens, in Bitcoin right now, it's like 20 minutes, right? So when you say like you're going to do a payment, that payment, as if like you had a credit card, that payment happens immediately. In Bitcoin, if you're doing it on chain, it doesn't happen automatically. Now, here's the thing: what companies have been doing is like they'll say, look, I will have a Bitcoin here, and then we'll have sort of like this other mechanism where you guys can do the immediate transactions, right? Like so. So then, you always hear like, "Hey, I just bought Bitcoin, right? I bought it off of Coinbase, or I bought it off of the PayPal app, right?" What's happening there is that they're sort of saying, "Hey, you bought it. You bought the Bitcoin," or "Hey, you made the payment. You bought this with Bitcoin," and they make that transaction immediate. What's actually happening in the back end is the financial or the payment company in the back end is just kind of holding it, right? So they may be holding like $50 million of Bitcoin, but then they put $50 million of like what seems to be Bitcoin, right? And you're doing transaction payment. But you see what I'm saying? So then that payment there could seem like immediate, but really, if at the end of the day, they're just trying to balance their books, like, hey, we spent $10 million in Bitcoin, right? So now let's go put it on the blockchain and say, hey, $10 billion, or I'm sorry, $10 million of Bitcoin was spent. Then they'll do that sort of transaction. You see what I'm saying?
So let me ask you a question. I mean, let's go back a bit. You've used the word blockchain a lot, and I think people confuse blockchain with Bitcoin and cryptocurrencies. Can you explain what blockchain really is?
Yeah. So in a very, very high level, it's basically if you can imagine like so in CS computer science, there's this concept of linked list, right? And basically it's just like you're taking one link and you're adding to another, like a chain. You're just adding it like this. And the thing is, like in computer science, you can just create this sort of array of links immediately, right? It's just a computer program. Now in blockchain, what they do is in order for you to connect this link to this link, there has to be some sort of encryption and a compute. So they call it like proof of work. So basically, if you can imagine, like I have two things and I'm going to connect it, just like say like a combination. It's like, hey, do a whole bunch of combination, do a computing. Say, you know how you have a lock that has like maybe 6 different combinations or whatever.
Yep, right. Yep.
Imagine if you had the same thing, but it's like billions.
Okay,
and you're literally doing this, right?
But what's the purpose of blockchain? I mean, you're talking about how it connects things, but what is it connecting?
Well, no. So that's I wanted to get to this point where, because it's really what matters about this chain is that it's the data behind it, right? And really, it's just basically saying, if I put data into a database, I want to make sure it's secure. What do you think is the best way to do this without me, first of all, having it be a centralized database, that it's not just on one computer, but it's now distributed to not just only a few, not even 100, but like say 10, 20,000 computers, right? And the question is, like, you can try to do that on a regular like relational database and try to scale that, then you'll feel very quickly it's gonna be very hard to do that, right? So in the blockchain space, like they're basically securing links of these blocks. So what happens is that because you connect these blocks, and basically inside these blocks are just transactions, right? Okay. It's a ledger, right? And the more you add to it, what happens that every time you connect it, there's like, you have to do a hash, you have to do a sort of like this huge computation to connect it. And the next one, it's the same way. And the problem is that because it's distributed and everybody has different copies, and there's no central, like, think about it, there's no central like database. Like there's no like one computer has that master copy and then everybody copies it. It's like
Right.
this consensus. I mean,
Like a
So
virus.
Brian, so this is really used for as a ledger. So if you were to buy something like Bitcoin and somebody's selling it, it would record that somewhere. Is that correct?
that's right. That's right. Yep. Yep.
And then it would then follow if the next person buys or sells, it would follow that chain. Is that right?
Yeah. So just imagine like you and Josie, we had like we had a piece of paper, right? And then someone calls out like numbers, and so you hear it, you hear it, you hear it, and then you write it down. So you say you write A, and then he says B, and then C, and then C D E. But then when it comes to like F, Steve and I, we heard F, but Josie heard Z. So he writes Z, right? And so the point is that like who's right, right? So this is just only three of us, but can you imagine this kind of happening, with 10,000 people? So the question is like who actually owns like the real, the real like the that's this the ledger, like who owns like the real truth? And so then I'll say stop. Okay, well Josie, you said Z, but then I go to Steve and I'm like, well, what do you have? Oh, I have, okay, I have the same one. And then if you had a fourth one, it's like, oh, I have the same thing too. So then what we'll all agree on, it's like, okay, we're going to go with this chain. And Josie, see you later. you're out, right? So that's kind of sort of like how the blockchain, that's called consensus, right? So this is kind of like the old Byzantine, they had this like the Byzantine general problem is that if you had an army and they had 10 battalions or whatever, and then they're all trying to go at it, but then they have sort of the signal, and then what if like say one of them have a different signal, right? Like they have to make sure like, hey, is this the right signal that we're getting from the general, right? And so if it's not, then they just ignore, what I mean? They'll just say, hey, ignore that command.
Yep.
Yep. So that's really essentially what the blockchain is that this is going on like independent, like no, there is no like central server. So they have to figure out a way to like, hey, what is the right answer? And that's sort of like how it manifests itself.
And this is a permanent transaction, correct? It's permanent, so anyone can see it. Is that correct?
That's right. That's right. I can see your piece of paper. You can see mine, and you can see Josie's, and his is wrong.
Okay.
Right.
So, it's interesting because there are companies out there. And by the way, this is probably, Jocelyn, this is probably a good time to say the disclaimer.
Oh, okay. Yeah, sorry. I get so sucked into this, I forgot about the disclaimer. So yeah, anything that we talk about on the podcast, whether it's cryptocurrency, whether it's securities, whether it's a combination or both, anything that you can invest in, really this is for informational purposes and entertainment. We are not advocating that you make any purchases or any investments based off of this information. If you are interested in any investments, talk to your licensed professional.
Right. Okay. And the reason I asked you to do it then is because there are stocks out there right now that are using blockchain. And one I know that's in the credit card processing business, and I won't say the name so we can't get in trouble, but they're in the credit card processing business. And because they're using blockchain, I understand that it is faster and more secure. Would you agree with that, Brian?
Yeah, I mean, so yeah, you have to be careful when people throw terms out like that. So, I mean, generally speaking, yeah. I mean, the thing is like in the cryptocurrency space or the projects that are out there, there's so many different. So it all started from Bitcoin, and just remember, Bitcoin is when it started, like it's like an open source project. So this is the thing. Like the thing is like that your audience need to understand is like if you understand the whole open source movement, then you'll understand sort of all this other sort of projects that came out of it. So,
so this is kind of the difference though between say cryptocurrency and blockchain, because the company I'm thinking of, and we do own it, so I can't really say what it is, but the company I'm thinking of has kind of a private it's not open source blockchain.
And that's why I wanted to talk about this, because like going back to the open source, right? Like there's Bitcoin is an open source, cryptocurrency. You can see all the code there, but then people took forks of that, right?
Right.
And then created other different cryptocurrency, and then other folks actually took it and then said, hey, this is our own, and we're just going to code it ourselves, and then we're just going to sell it privately. Like we're not going to, all the improvements that we done on this code base, we're not going to put it out there for anyone to see. So those are private. So like, you know what I mean? Like you see like the different applications out there, like, Microsoft Word, right? Like, can you imagine if Microsoft decides to kind of open source their softwares, right? And I think they've done something like that, but they don't want to do that because they want to protect their IP. And so if you look at a lot of these cryptocurrencies that are open, like you can literally go into the GitHub, and that's like the open repository, to look at the code. And if you see like bugs in it, you can actually go in there, contribute, and fix it, and fix it. You know what I mean?
Like Wikipedia.
Exactly. And so the private blockchain, the question is that, like, what's the point of creating a blockchain that's private, right? I mean, you could have just created a database behind it, right? The point of that being at public is that because Brian,
in this particular case, I think it cuts out the middleman.
Yeah, I mean, I don't know what I'm at. I guess what I'm trying to say is like creating a private blockchain, right? Versus a public blockchain. So the public blockchain, it's necessary because everybody can come with a piece of paper, right? Like you, me, Jocelyn, and write stuff down, right? And it's completely transparent. It's out there, right? In order for that to be secure, like that information, you need like a mechanism like blockchain, right? Because it's open and anybody can literally come with another piece of paper and start putting false information as well, right? In a private blockchain, it's like you can control who's going to install the software, right?
So you're saying there's no checks and balances? There's no way for somebody to...
Yeah, I mean, I'm just trying to figure out what's the best way to kind of make this illustration, because like why don't you put in like some of the ERP systems, or like like some of these databases that are run on like the huge the relational databases, right? Like why don't you just run that, because it's going to be much faster, and then you can actually create like you can actually cryptographically secure those records using just a private just like a regular database, right. And it'll be much faster. So but the thing is that if you try to do the same thing out in the public, to use databases, it just becomes a huge nightmare. Like can you imagine everybody that has to create a node has to get that relational database, and there's so many different technology stacks on there that there's vulnerabilities there. Like just even if you try to do that, but if you just have a mere blockchain that data itself is cryptographically secured, that's all you really need, and you just kind of put it into the different validator, they call them nodes, but you just put it there, and just like the piece of paper, you just say, hey, this is what I have. What do you have? Oh, you have that. You see what I'm saying? So that message there, that ledger is so secure through a blockchain that's public, right? It's public because anybody can go in there and participate. Anybody, they can't stop it. You know what I mean? So that's why, and not to go into a different discussion about these mining pools, and it's being controlled by other nation states that are not so friendly to the United States. That's why it could be a concern, because anybody can join. But then, that doesn't stop from the U.S. from building more, right? Bitcoin nodes. So it's kind of sort of
okay. So we're all about trying to make money here and investing. And the question I have from a lot of people is, one, how do you invest in Bitcoin, Ethereum, whatever coin you're talking about? And really, how do you make money on this? I know that Bitcoin goes up and down based on supply and demand, but what's kind of the long-term view? How are you going to make money in this?
Yeah. So so yes, I mean, of course, everybody wants to make money, right? And when I used to work at Merrill Lynch, when I first graduated from college, my first job was a high speed trader programmer, and so I really had to understand like how some of these like like these high frequency trading system had to work. Even got my Series 7, Series 63, right? As a programmer, right?
So you're one of us.
Yeah, yeah, I'm a geeky version of you guys, I guess. But so of course, like, how do you make money? And so you see some of these like speculative stocks, like penny stocks, and it's like, well, how do you make money on those companies, right? And then you got the other companies where, like, in the .com era, dot bomb era, especially, like when Amazon came out, like, people were kind of questioning, like, why are you spending, a stock like this? That's and I think back then it was like what 10x revenue or something, 40 times, 50 times, 70 times earnings. And you kind of see that sort of happening here with cryptocurrency. And so, when you see like a cryptocurrency like Bitcoin, I see Bitcoin as like not a medium of exchange, more of store of value. So really what it is that, like, if I want to park my money somewhere, and it would, and again, this is debatable, right? Because the price swing of Bitcoin. But if I want to put my money into something that it's cryptographically secure, and that if I have my own private keys, if I put my money there, do I know for sure that that's going to be there, 70, 80 years from now, right? Now, if I try to put the same money into a bank, can you guarantee the same sort of assurance that that money is going to be there 60, 70 years later from now? Like, like you don't have no they don't know where you live, right? Like, it's just your money's there in that bank account. Is it still going to be there before the bank decides, hey, nobody replied, so I guess we'll take it, right? In Bitcoin, if you put money there and you have your private keys, you can literally send that Bitcoin to 3 or 4 generations from now, and no one can touch it, right? I mean, what you got to do is, like, how do you tell the third, fourth generation your private key, and how do you get it in their hands so they can unlock it? So, so the thing is, the question is that, everybody wants to make money, and I understand that, but I see the first scenario is like, I personally, for myself, I always say I'd like to use Bitcoin as a way to establish my legacy in my own family, right? So that's kind of what kind of motivated me to kind of get in here, meaning that, hey, if I invest just say $500 right now in Bitcoin, and say, knowing how crazy people are with Bitcoin, and knowing how much they're trying to collect it, and knowing that 20% of Bitcoin supplies out there is forever lost. So there's what's even restrict more because people forgot their private keys or whatever it may be. Just
20%?
Yeah.
That seems like a lot.
Yeah. But so the thing is, when someone says Bitcoin's going to go to zero, well, how does it go to zero if there's 20% still out there? Right. So anyways, like, the point was, like, when I got into it, I was like, how can I make the biggest impact for my family? Not just my kids, and not for my grandkids, but my great-great-grandkids, right? And if I put $500 into a wallet right now, and say 3 generations down, like, that's about 100 years. To me, and this is my opinion, I just put just a little bit of inconvenience for myself to make a huge impact to my great-great-grandkids, great-great-great-great-grandkids. And the thing is, they're going to be praising your name because you made such a big impact in their lives. And that's just my feeling. And so $500, I mean, even 1,000, like, that's nothing to you right now, right?
So it's because I'm still a little bit hazy on this.
Yeah.
Are you telling all of us here that basically it's a collector's item that's going to be worth more because it's a supply and demand?
Well, that, and also, like, the supply of Bitcoin, it's limited, right?
I was just say, isn't it finite? There's only a
It's
certain
funny. It's
amount.
only 21 million Bitcoins out there, right?
Yeah.
But the pool of that can grow infinitely, right? And so now that you're seeing, because I kind of knew this was going to happen. I mean, I watch like, Jim Cramer, right? And I always like to get some stock tips from him. And he always says, hey guys, make sure you put, 10% of your net worth into gold, right? And I'm like, that's interesting. Okay. I did that, right? And I'm like, well, I put gold here. I mean, if I had gold, physical gold, and I bury it, then what's the worth of the gold? Like 3 or 4 generations from now, right? It's going to retain its value, right? And so, like, because of inflation, but $500 or whatever, it's probably going to be worth like 5,000, right? Just pure inflation,
Right.
plus people buying gold as well. So that there's that sort of. So, anyways, the point is that it's the digital gold, and you hear. I mean, right now it's like. Now they're talking about not only so again, the gold was 10% of your net worth. Now you're hearing people saying 5% of your net worth into cryptocurrency. And then now you're hearing all these companies now they're putting, instead of putting in treasury, they're putting into cryptocurrency, right? And now and it's like, it's just only starting, right? And so, whether that's hype right now, it's going to go up, going down, whatever, but $500 to just maybe like even if it's like a 5% chance of like completely changing your great grandchildren's life, right? Livelihood. I think it's worth it, right? So that's number one, right? Like that was like why that really motivated me, and I got that out of the way. I was like, okay, here it is. Got my private key. Here it is. And you know what I mean? Like, so all you really need is that private key, and once you get that private key, which is like a password, you can actually put the private key and then like not put in the last 5 digits there, and right, like someone has to guess like that, but like you can do all these little tricks of like how do I get this in the hands of like 3 generations from now, but did that. So then the second thing is, okay, now what can I do here like that can make some how can I make money just temporarily, like short term, like my life, like
right now.
Yeah, right now. And so the thing is that, and this is kind of like when, before the show, we had sort of this conversation, and it's like the concept of what Bitcoin did, like try to look at it from a macro view, like what is Bitcoin and what is it though, right? So like Bitcoin wasn't produced by a nation. It wasn't produced by a president. It doesn't have a CEO. It doesn't have an HR department. There's no phone number to call. There's no email, right? There's no one to call. It's like, it's just there, and it's like millions of people are supporting it, right? And it's like through their machines. I mean, right now it costs a lot of money to sort of have like a rig, right? A Bitcoin rig. But like when it started, like you could literally have a Pentium 5 to support Bitcoin, right? And so then what happens is that there's all these other projects that are sort of evolving that way. Like there's a lot of projects that are starting like Bitcoin, but they're creating a sort of a distributed thing. So actually, let me just go back to this first point about Bitcoin. What it was is that it was a completely decentralized system, right? There's no company behind it. And so the question is, can I create economies similar to that? Like, so a decentralized sort of self-autonomous company that's kind of based on the same technology. And so what I mean by that is, look at Amazon, right? Amazon's a good example of this. Like, so Amazon, it's amazing, right? You can exchange, or you buy, it's a marketplace, you buy stuff there, they send stuff to you. And by the way, the richest person in the world is Bezos, right? And so can you imagine, and again, big imagine, can you imagine a world where you have an Amazon, but could that also kind of apply the same principles of Bitcoin, where completely distributed, decentralized, no Jeff Bezos, all supported by a system that kind of like the Bitcoin community. And can you have a completely decentralized Facebook or Amazon, right? And then now go beyond that. Like, can I have a completely decentralized Airbnb, a decentralized eBay, right? A decentralized Facebook, a Twitter, right? And so that's where you're seeing sort of the innovations happening now, right? Where can you see a world where you won't have like the Mark Zuckerbergs of the world testifying Congress because they have your data, right? Now all that stuff is completely secured onto a blockchain, kind of like with Bitcoin, right? And so that's where I kind of see the interesting play of the crypto economy. But I want to just kind of be like I don't want to call it cryptocurrency, right? Because when you say cryptocurrency, you're thinking, oh, it's money, it's payment. No, it's like
right. That's the first thing I think of, really. And
yeah.
I think that's what the first thing most people think of.
And that's why I always say it's like the last thing. It's like the last mile. Like, hey, I'm gonna use Dogecoin for me to pay a coffee, right? And the thing is, those like projects are cryptocurrencies, but then there are other projects that have tokens that are used to power the decentralized Amazon, right? So so that's why I feel like if you could invest into Amazon, 30 years ago or 25 years ago before it turned into Amazon today, would you do it? And of course, the answer is yes. And so the question is that, I mean, who knows? I mean, there's a lot of projects right now that's trying to develop sort of like the decentralized Amazon now. You can actually buy their token and support their projects, right? And then you can even go beyond that. You can actually be a participant and help code it because these are sort of open source like projects.
Okay. I'm still not sure I understand it fully. Because it seems to me that in order for it to increase in value, you've got to say that there's some value there. So, when I've got a house, in time, somebody may say, hey, that house is worth more, so I'll pay more for it. Yeah. Whereas with Bitcoin, I'm just not sure, if it's not a currency, what the value is. And when you say a store of value, so far there hasn't been a store of value at all. It's gone from 500 to 60,000 to 30,000, and it changes $5,000 and $6,000 a day.
It's interesting though, Steve. When and I know we were talking about gold earlier, and this is kind of what comes to mind for me when we're talking about a store of value. We're talking about basically something that's been created from the ether, right? That people have, like you said, are now placing a value on. But I mean, look at diamonds, right? I mean, you can go get them in the ground, right? And like you said about gold, all gold is just an element, right? Or it's a piece of metal that people could go dig in the ground at one point, like the gold rush. And we've all just agreed that it's got some value because it's got a limited amount that's in the earth, and it's a precious metal. But the reality is, it's just another metal, right? But we've all said it's got some kind of value.
So let me ask you this, Steve. So let me ask you this. So if I gave you, and I'm going to kind of change the topics here, cryptocurrencies, to another innovation that's happening in the blockchain space. If I gave you like a canvas and a couple of like, I don't know, like oil-based paint, and this big, and I want you to draw a face, right? Like, how much do you think that that cost, right? How much is the cost of that to you, right?
Are you talking about a real painting?
I'm just saying like just the like just face value. It's just a cloth, and then you're painting stuff on it.
Right.
Like, what's the cost of that?
The cost of it is very little.
Yeah, it's pennies, right?
Yeah.
And so the thing is that now when you see that and you see Mona Lisa, right, you're like, wow, no, that's priceless, right? Like, there's no price to it, right? And like if an alien comes in here and he just sees it, he's like, yeah, this is nothing, right? Because from a different world, like, they don't value that. But in this world, like, the whole billions of people value that, right? But it literally costs you pennies to make, right? But the value is not because of the cost. It's because whatever the whole humanity puts value to, right? So
the agreement.
Yeah. So right now, what I actually want to talk to you about, so this is kind of an interesting play right now. They call this the NFTs, right? So these are non-fungible tokens. And it all came from the bowels of Bitcoin, right? So it's, Bitcoin, what is it? Those are digital fingerprints. I have money. So then can you verify that that's what I have? I have this much Bitcoin. Yeah, it's on the blockchain. Now, can you imagine if you're able to do like digital baseball cards, right? And at the end of the day, it's like they're creating these sort of like collectibles, digital collectibles, right? And instead of having cards, which literally cost you pennies, they're digital. They're digital representation of baseball cards, right? So the question is to you is, do you think that that's not going to be as worth as, say, a piece of paper that has ink on it that costs pennies, or a completely digital version of it, right?
Right.
Do you think like, the value of the baseball card is actually less, or is it more? It shouldn't be zero. Like, what's your opinion about that?
Well, no, I think I get what you're saying. As long as that can't be replicated, yes, it would be worth something.
Yeah.
And I think that's where you're going with Bitcoin. The difference.
Well, actually, it's just digital rights in general,
Right.
Right? Because ultimately that's what it is, right? Um, it's I put value on something that for a unique digital fingerprint on the internet, right? And
Right.
that's what Bitcoin created, but it's distributed, and nobody owns that. Like, there's no Amazon.com, Microsoft.com that has that, and that's the master database. It's like it's an open database that anybody can tap into and everybody's supporting, right? And then if I can now put some of these digital assets the same way, so let's just say like baseball cards, right? If I can now get a baseball card digitally, and then now I can trade it, but now I can instead of just going to one, and they call it non-fungible token marketplaces, if I can sell my, Joe DiMaggio digital baseball card, but I can literally go to any marketplace. Like, the point is that if I had that digital representation of that baseball card, that's going to be worth money. And if I knew the person who made it, or the athlete themselves maybe created only 500 of these like digital fingerprint, like digital baseball cards,
Right.
It's going to be worth something, right? And so that's what you see now. You see a lot of artists, they're doing the same way. It's they're actually creating digital arts, and it's only one copy. That's it. And they're doing all these neat things where if you own that NFT, then, and there may be 3 of them in the world, right? And the thing is, like, if you own it, the artist can say, hey, the 3 owners can now have dinner with me. Like, that could be an experience. Right? You can manifest like the rights of that art to the different experience by the artist. And same thing with athletes, right? Maybe
you would be able to show that to other people, correct?
Yeah. So basically, it's just so if you have an NFT that's like, it could be like a 3D version, right? And then in order for you to see that, you have to see it on their software to unlock it to see it, right? Or, I mean, the point is that these are just like digital rights to something that the creator created, and then he can actually attach different experiences to it, not just only viewing experience, right?
It seems like that'd be great for athletes. They can take some control over their image and market market themselves instead of tops.
I actually just saw something like that on the internet, and I forgot who it was. There was some painting of, I think it was Mars or something, that just sold for, I don't know, $500,000, some astronomical number. So that's already happening. But I can envision that because I know what a baseball card is, and whether there's a physical card or a representation that's the only one that it is, like a picture of it.
Yep.
I can get that. What I'm having trouble with, and I think a lot of the people who are listening to this are having trouble with, is Bitcoin is like, it's air. It's electronic something. But what? If it's not a currency, what is it?
Yeah. So I mean, again, that's a really good point. The thing is that if you look at the NFT example, it's rare. A lot of people want it. And is it going to go away, right? Like, it's something where if everybody shuts off their computer, and then like it doesn't support, there's no infrastructure for Bitcoin, then I can see that, right? But you literally have to shut down the internet. So again, like, so like the so I guess the question would be this. Like I remember my dad, he was telling me about like back in World War II. So when there was a lot of like folks that were just moving, and there was in Europe, there was a lot of displacement that was happening, and then when there was like turmoil coming in, and then the sort of like this sort of army is going in there, and it's like they're basically pillaging everything, they're taking everything, right? And so it's like, hey man, we just got to like grab what we can, right? And so one of the things would be like, well, what's the biggest store of value, right? Maybe I can do some arts, maybe gold. So gold was a very big one, right? Like, because I can get it, like if I can get the representation of like my net worth and like get it at least into gold, I can at least carry it, right? Like I can just carry it with me, put it in my pocket or something, right?
So if all the paper currencies go bad, you're saying this could be something people would use.
Yeah, I mean, so it's like this. It's like if the same thing kind of happens, like the first place I would do it's like not put in the bank, because by the way, that's what they pillage, right? The banks, they unlock that, right? That's the first thing that they try to get to. And if I'm able to put it out of the reach of any of those powers, authorities, I'd put it into Bitcoin.
All right. So I'm going to assume that you're right. You know more about this than I am. You're the expert. And in time, it's worth more. So how do people buy it? How do people get involved with it? What's that process?
Yeah, I mean, we named a couple of like exchanges, but yeah, I mean, you saw Coinbase. That was one that kind of put cryptocurrency on the map. But like now, there's a lot of banks and a lot of providers out there that are now that you're able to like buy Bitcoin. Um, so you could do that. I mean, now banks are trying to figure out ways to get into the action. So the Wells Fargos of the world and the Bank of America is like all those banks out there. They're just trying to find ways of how to sort of open this sort of access to cryptocurrencies to the customers. So yeah, I mean, you can literally just Google like buy Bitcoin,
Okay. So
and
it's not hard to do.
Yeah, I think these days it's getting a lot easier, like you said, since Coinbase came around. I know. I think it was probably 3 or 4 years ago. We were talking about this in the office, and the whole Bitcoin thing had just kind of started exploding. And I was, I'm going to go buy some, right? But I think Coinbase wasn't super popular name at the time, and I got nervous. I went on the internet. They had a very simple website. And I stopped because all of a sudden there was this unknown company that I'd never heard of before that was my only conduit to Bitcoin, and they wanted my social security number. And honestly, nobody I knew had bought Bitcoin or been on Coinbase. So I was like, you know what? I'm just going to stop here at this moment. And I got a little lazy about it because I thought, well, I could probably just maybe use a different account. But anyways, now Bitcoin, everybody knows. I mean, it's almost like the trusted source, right? Of where you're going to go buy your whatever cryptocurrency you want to get involved with. But a while back, it seemed a lot more like the Wild West, and I was very nervous about handing over my social security number to some pretty unknown company.
Yeah, so that's a really interesting point because like the folks that they call emojis, the original gangsters, I guess. Yeah. So some of the OGs, like they would actually not buy it; they would just mine it. Okay. So, and what I mean by that, it's like they literally got a Pentium 5, like the slow machines. Like they literally got that machine, download Bitcoin, like the code, and ran a node.
Yeah, I remember the stories about the early days of college kids in their dorms just mining Bitcoin.
And then those very same people are like billionaires.
I believe it.
Yeah. So I mean, back then it was definitely a different world. And then also the thing is back then as well, there was a lot more nefarious activities with Bitcoin because the perceived notion that it was it preserved privacy and they couldn't follow the money. And so, the Silk Road and some of these like darknet markets, they were transacting in Bitcoin. Little did they know that that was probably the best place for the law enforcement to to track them because it's like permanently on the chain.
Yeah, that's what I was kind of thought about
Yeah.
that.
Yeah, but yeah, the thing is like yeah, back then it was much harder. It was definitely much harder to get hands on Bitcoin. But yeah, nowadays, yeah, you should be able to like literally Google it and you'll see it. You'll see some very big names that you can buy it.
Okay, so there are still people who are mining Bitcoin. And I think that concept is also something that people don't quite understand. I know Elon Musk was talking about, first of all, taking cryptocurrency, then not taking it. And then he said the reason he didn't want to take it was because the mining of it was bad for the environment. So, could you kind of explain in ways that most people could understand what do you mean by mining it, and what did he mean in what he said about the environment?
Yeah. So the thing is about so this is more of like computer science 101, right? It's if you're going to solve a problem that has millions of combinations, right? It's going to take a lot of compute power, right? And so like have you played like video games on your laptop and then you hear the fan go it's like,
I do a lot of video rendering.
Okay, yeah.
I do video rendering. Yep.
Yeah.
I know what you're talking about.
That's what's happening when you're mining. And so all that really is that, again, remember back to the notion that anybody could participate in the Bitcoin network, like meaning that I can just download the software and run a computer. Like basically, it's the computer program that supports Bitcoin. And so there's different components of it, but like one of it is the validation and the nodes. And so again, like remember I said, Steve, what's on your paper, and Jocelyn, what's on your paper, and what's on my paper.
Yep.
We're kind of like nodes, right? And so we're basically saying, okay, I see that, I wrote A, B, C, D, but that takes that writing down like that number is basically the huge computation, just like when you're playing video games on a computer, it's literally going to do that. It's this high pitch. So with Elon Musk, he was saying, well, millions, and it's not millions, by the way, the machines, it's tens of thousands, hundreds of thousands of these machines they're competing against to solve that puzzle. And then whoever wins it, then they get it. And then if they, as a reward for now minting into the blockchain, they get Bitcoin. So that's the whole point of your mining it. So just remember, it's like a competition, right? Someone says the word, like, oh, I can solve it. And then whoever solves it first, then the guy throws the money and says, okay, you got it, right? So that whole process is like, it takes up a lot of electricity. Now, it was misguided with Elon Musk when he said, hey, it's we're wasting a lot of electricity, which is true, but little does the world know that actually so there was a research company that actually figured out like how much renewable energy like Bitcoin these miners use. It's almost like 70%. So a lot of the compute is clean, so to speak, rather than just using electricity from coal.
Well, I know there are some companies out there, and one of which we own. And again, going back to our disclaimer, we're not saying you should own it if you can figure out what it is. Not going to say the name of it, but it is mining Bitcoin by using alternate energy. So it's not using the grid.
Yep. Yeah, and in fact, like a lot of mining companies, and there's companies, by the way, there's public traded companies that do mining. They're actually going to different countries because the electricity is cheaper, and that's their operation. Is that they're just mining Bitcoin.
Okay.
Publicly traded companies.
Now, if you buy and or sell any of the Bitcoins, Ethereum, or any of these other things, are there taxes involved with this?
Yeah, that unfortunately that's going to be another hour. Yeah, I mean, that's the thing about regulation is that and the U.S. government is trying to. It's a balancing act for them, right? Like if they over-regulate this, then that could also discourage companies from staying here. They'll just forklift and go some other place where it's more friendly for crypto. And New York City tried to do that, and now New York. Funny, right? New York is like the Wall. That's like the epicenter of finance, right? And like I think like 3-4 years ago, they made it. They had said, "Hey, it's illegal for you to have an exchange here. You have to have a license." And literally, like it was like 4 or 5 dozen exchanges like left, and I think there was just only a handful in New York. Yeah. So.
Well, the other thing about that too is I understand that it never closes. So mining of currencies or whatever is open 24/7.
24/7.
Yeah. Because the internet's always open.
Yeah.
Yeah. Everybody needs to get to their latest meme and viral videos.
So what about security? Should you be afraid if you have this about getting hacked?
Yeah. So there's this is also a difficult question too, right? Because when someone says, "Oh, Bitcoin is hackable," right? The thing is about like Bitcoin, it's probably the most hacked code base in the world, but it's the most resilient, right? And so when somebody says, "Hey, I got hacked," usually it's kind of like saying, like, some of these internet companies where it's like, "Hey, like they got hacked," or maybe my email got hacked, right? So if your email got hacked, does that mean that your provider got hacked, right? No, right? Because that's on you. That's social engineered, right? So it all depends what you mean by hack. So a lot of these security hacks happen because it was socially engineered, right? But in terms of like the actual cryptocurrency, so like Bitcoin, even Dogecoin. I mean, they're actually supported by really sound cryptography, right? And it's extremely hard to kind of to hack the actual like cryptocurrency. So like if you actually have Bitcoin into your wallet, and if someone says, "Okay, try to hack into the wallet," it's nearly impossible to hack into the wallet. Now they say, "Hey, Brian, download this software, right? And it's going to track your keystrokes like on your computer, right?" That doesn't mean like Bitcoin got hacked. It's just using a computer that intercepted your keystrokes, but you could have been on a word processor, right?
Hence, like the social engineering that basically somebody's maneuvering in a way to obtain the key that you were mentioning before that you get.
Yeah. So the key is the issue. So like, is it easy to hack a key, right? The private key, right? I mean, then the point is that if you're able to hack that, then we got bigger issues to worry about, because the whole e-commerce, like everything is on PKI. It's on the cryptography. It's all based on that. All your credit card stuff. It's all transacted on those elliptical curve.
So the main thing then is make sure you don't lose that key or the password.
You're going to end up the 20% that can't get their stuff.
That's a good question. What happens to that 20%?
It's locked up forever.
And no one can get it.
It's like a big block. It's like a big block of gold at the bottom of Antarctica that nobody can get to.
Yeah,
I can see like 100 or 200 years from now, people like diving for treasure will somehow dive for this treasure.
Yeah, no. So unfortunately, it's just how do you decrypt a section of a blockchain so now you can now move things out, right? I mean, that's ultimately what it is that it's like, hey. It boils down to cryptography, right? So if you lost the private key, it's unless quantum computers that can unlock this, in 100 years, maybe that day will come.
All right,
yeah. So those three generations that you're talking about, like you said, you got to be able to get them that key somehow. Otherwise, it's just going to be a big block of chain.
Exactly.
All right, so I'm going to ask you the big question here before we finish up. And that is cryptocurrency prices, Bitcoin prices, and a lot of these others, whatever coin you're talking about, crazy coin, whatever they are going all over the place as far as going up and down. If you had to sit here and guess, I think I know your answer, but if you had to guess 10 years from now, do you think that the price of these coins, this crypto whatever, is going to be a lot higher than it is today?
So again, I want to reiterate, this is my opinion. So don't take this as financial advice.
And we don't want anyone
buy it based on or selling based on this.
All right, we don't want anyone to buy it just because you said it, but I want to know your opinion.
Yeah, I mean, just as much as I want the Wizards to like win the NBA title. So I mean, my opinion is, it's interesting because like, if you ever look at the life of, so I'm just talking about Bitcoin here, right? Because Bitcoin is kind of like SPY. That's, they always say like if you're going to be building and you're going to be self-managing your own 401k, at least create the base, which is like the index funds, right? Because they always say, "Hey, could you beat the index fund?" It's like, well, why don't you just buy it? Like, you know what I mean? Like, oh, did you beat the S&P? Well, no, I just bought it, right? So the way I see that is like, I think the cryptocurrency, your portfolio should be the same way. So, like, most of your portfolio should be like Bitcoin and Ethereum should be like more than 50%. Now, that being said,
I'm sorry. Did you say more than 50? Like 50?
50% of your crypto
portfolio, of your crypto portfolio,
okay. Right?
Yeah.
And again, I take Jim Cramer's advice of, remember he had said 10% in gold. Now he says 5% gold.
Yeah, we don't want to mention Jim Cramer too many times on our podcast.
Well, I have to give him credit though, because he mentioned Netflix and Salesforce 15 years ago, and I bought it. 4,000% later, it's like that was a pretty good bet. So anyways, like the point is that 5% of your net worth, right? It's like, so the point is like, if you put, so in 10 years, so the concept I wanted to talk about was like, in the last 10 years, Bitcoin is surprisingly, and I went to an engineering school, right? So we're very big on like, formulas and derivatives and things like that, and graphs. Bitcoin follows a graph almost to a T. So it's almost like there's a formula there, right? Like it's following it, right? And so it's already been through like 4 different waves, and it's like, it's very accurate. And then now we're sort of going in the 5th one. And so if you kind of continue that and say in 10 years, again, my opinion, it's for sure going to go up to 100, right? The idea is like, it goes to 100, it crashes down to 30, and then it rockets up again, right? And that will go up to 300,000, right? So I think around that time, I'll put my bets on like 300, 400,000 in 10 years.
Well, and just so everyone knows out there, if you are our client, you can come to us and we can talk about it. If you're not our clients, go to your financial advisor and talk about it. We don't want you just to take Brian's word, even though I think that Brian really knows what he's doing.
Well, he said it was his opinion.
Right, and it is
opinion.
And just to be clear, because I'm the disclaimer guy here, look, everybody needs to know, whether you're investing in NFTs, securities, Bitcoin, crypto, baseball cards, you can lose your money.
Yeah.
You can lose all of it.
So I'm going to be loading up on a lot of NFTs in the next couple of months for sure.
Yeah. So we don't want to paint just the rosy picture here of how great things can be. Investing involves risk. You can lose your money. So talk to a professional, and even then, you can lose your money.
So if I take my own virtual picture and I can have a virtual autograph from Michael Jordan or something like that on it, it might be worth a heck of a lot someday. Is that what you're saying?
Yeah, because Michael Jordan's he's gonna have your name on his. He's gonna have the ledger.
Exactly.
Right. He's gonna know where all his digital properties are, and your name's gonna be on it.
All right. I think I'm going to do that tomorrow. All right. Well, Brian, thank you so much. I know we just took an hour out of your life, and we really appreciate it. I'm sure that all of our Steve Stock Story listeners appreciate it. And I know we're also videoing this, so some of you might be able to see us. Too bad. I mean, we've got good faces for radio, but Thank you very much. Appreciate it.
Yeah, Brian, thanks so much for taking the time. It's always fascinating talking to you, and super exciting space.
Right.
Yeah, it was a pleasure. Thank you for having me, Steve and Jocelyn. Thank you.
All right. Thanks again. And we'll see you again on the next Steve Stock Stories. Take care.
All right. Always a good time. Take care. Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.